Get more on this now with Jameel Ahmad. He's the Director of Investment Strategy at NAGA in London. Great to have you back with us, Jameel. Now, a huge expose implicated really most of the world's biggest banks. Can you tell us more about how the markets are reacting to this expose?
It's shocking. Most people are shocked by this, and unfortunately, it's just going to ruin the credibility of the banking sector even more. So initially, we saw Hsbc shares decline in Asia this morning, in Hong Kong to the lowest levels since 1995. You've had Lloyds Banking shares are down by 5% in London, the same with Standard Chartered. Credibility, trust, and it's really a worrying headline. There's no denying this, and there's going to be a lot of questions that need to be asked as to how money laundering or dirty money is being allowed to be not only sent through the system, but it appears that banks were aware of this, but they couldn't stop it. And overall, the banking sector is going to be caught up in this global market turmoil because Europe and the United Kingdom are very worried about the second wave. We're talking about local and national lockdowns over in this area. So this means that riskier assets are off the table for investors anyway. So banking shares, stocks, oil, emerging market assets, everything's been caught up by this pandemic-induced fear for version 2. And this just it's the icing on the cake to say, you know what, stay away from banking stocks as well.
Okay, can I ask you about the TikTok saga now? So over the weekend, US President Donald Trump said he basically approves that partnership between Oracle, Walmart and TikTok's Chinese owner, ByteDance. We know the questions about the ownership really had sent the share prices of those affected firms up and down in the coming weeks. Can you tell us how investors are reacting to the latest developments now?
This is still a very fluid situation. It appears that the initial ban on WeChat and TikTok has been now delayed by 1 week. So there's still question marks as to whether this deal will go through or not. But also the technology sector overall, if you look at Netflix, Amazon, Apple, and so on, they've all really been whipsawed by this investor rotation trade throughout September so far, where investors were moving away from tech stocks. And now we're looking at this pandemic flaring up again, with economies potentially going to lockdown, and we see that there is going to be a potential opportunity for those technology stocks to go back into investor favor once again.
Now, you mentioned the prospect of another national lockdown over where you are in the UK. Boris Johnson's government has really been trying to avoid that prospect because of the damage to the economy, but it's also not ruling it out. Can you tell us how investors are reacting to the prospect of another crippling lockdown?
Nothing is inevitable at the moment, but what they are saying in the UK is that the window is very much closing towards getting these precautions under control to stem the virus outbreaks. Otherwise, the lockdown will become inevitable. So really, it's the news that everybody has their hands around their ears because they don't want to hear it. But nobody can deny that infection outbreaks are increasing. This means that a lockdown is going to become more probable than a possibility. And the GBP, the UK pound, has been hit hard against all of its trading partners today, including the dollar. The only currency that it's actually up against is the South African rand, which is really the riskiest asset in terms of currencies the investor can have. And that goes to show how much global pessimism there is right now over this pandemic and a second wave, because investors do not want to take on risk.
Okay, Jameel Ahmad from NAGA in London, thank you as always for your analysis.